Hey, good morning, Melanie.
Good morning, Derek.
What's going on?
It's always good to be in your presence.
Oh, thank you. Yours too. I value our time together.
Me too. Me too.
Mhm. And I'm so bad at segues. Speaking of value, today's conversation is around collective equity.
You're
And,
actually excellent at segues. Case in point.
oh, I didn't feel that was very smooth, but I appreciate that. So where's the segue here for those people who are probably wondering what the segue is? So, we mentioned value and how we value our time together and we value these conversations, and the conversation is around equity. And for those who may know me but not you, or know you but not know me, so I do a lot of work in the diversity, equity, and inclusion space. And so in terms of social justice, and you do, of course, a lot of work in real estate. So you talk about equity in the housing market. And so we were having a conversation recently about, what is equity? Because for each of us, it means something different. And for the people who work in our spheres of business, equity means something different. But as we were having this conversation, we were thinking that equity is about value, whether it's about valuing people or getting the value out of business or getting value out of real estate.
Assets. Yeah. Mm-hmm.
Mhm. Yeah.
Mm-hmm.
So with today's conversation around collective equity, I mean, I can see collective equity in terms of the DEI space because it's all about, but how do we value people in a way that gets folks working together better, helping them understand our common humanity and our common dignity, and just valuing the dignity of people so that we can all live a valued, textured, and just dignified life for the most part.
Yeah. Yeah. With unfettered access, like that,
Mhm.
we have access to that quality of life that not any of us has more or less access. That's the whole point of equity, really. And so we tend to think about it in terms of race and gender and other identities because the level at which you have access to that kind of equity is about power.
Mhm.
So so yeah, you and I are often thinking about um, wealth in financial terms and how that then conveys to the value of someone's life or the quality of someone's lived experience and their connection to their communities. And today we're thinking about um, a really important part of that we take for granted, which is actually equity. It's being vested in yourself, vested in your communities, and having the assets and the things that you own or that you contribute to pay out to you, pay out to the people around you. So I actually really love that you brought up that question in our earlier conversations, in thinking about today's call, that equity is actually about a vestedness, even when we're talking about cultural and political access to power. It's
Mhm.
about vested and being able to actually reap the benefits of being vested and connected and engaged. So I love that. I love that you're connecting that to like economic power and just financial access.
And actually, I had a question for you. So you mentioned that equity is about being vested. Um, s- but as you were saying that, I was thinking about equity being something you can leverage as well. And so I was kind of wondering, do you see leveraging as part of being vested, or is it something that works with being vested?
I think that's the same thing. I don't actually see a distinction in the question you just asked, but having equity means that you have something to work with,
Mm.
right? You can leverage it, my meaning taking a small bit of something, um, investing it somewhere and getting a bigger return than what you started with.
Mhm.
So getting a return is leveraging, right? You put in something and you get more out. And that more could be financial, it could be something that you quantify, it also could be qualitative, like communal benefit. So I think that in order to be able to build equity, you got to be able to put something in to begin with. So what is it what's the equity? What's the starting point that we each have? I think part of why you and I wanted to talk about this is we wanted to deepen the conversation about what does it mean to invest money? What does it mean to have savings or assets? I think that um, because we're always going at these conversations and thinking about the lives of Black people culturally and historically and politically and economically, we come with certain assumptions that, well, a lot of Black people haven't been conditioned culturally, historically, politically to think big picture about their own finances. It's like, can I get enough to survive? If I've got that, can I have enough that I can save, that I can do a little something if there's emergency, or I can put something into the next generation? But do we ever get to think about using our money, using our assets in a way that has a broader community impact? So I love that today's conversation is going to be about both levels of financial equity and then how that impacts community around us. That you could have your own financial assets that may get you a little bit of distance in your own personal life. But what if you pulled in with a bunch of other people who had their own bits of resources that they can contribute? And then you have a larger pool of equity that you're starting with and that you can leverage and build more from. So a lot of this is a little bit theoretical right now because we're just still wrapping our minds around what does it mean to think about investing and being vested and equity and payout. We're trying to think about it beyond the individual frame. And today's guest is going to be superb at helping us really describe and explore what that can look like.
Right. And also not just thinking about it from just the individual or the community in the present, but also thinking about what it looks like looking forward as well. So I think it's time to introduce him.
Yes, yes. Today's guest is Jock Payton. He is the founder and CEO of Nubian Square Investment Advisors, a purpose-driven and Black-owned financial planning and wealth management business. The company provides financial education, financial planning, and investment services with a mission to invest in sustainable solutions and ways to close the racial wealth gap. The racial wealth equity gap. Jock was previously an equity research and analyst at Eaton Vance, which later was acquired by Morgan Stanley and became a $1.2 trillion asset management company. In that space, he provided market analysis and investment recommendations. He's also held positions as the interim managing director of Ujima Fund, a Democratic community investment fund operated by the Boston Ujima Project. Jock received an MBA from the Wharton School at the University of Pennsylvania, and he's a chartered financial analyst. And we're so delighted to invite him on.
Good morning.
Good morning. Good morning. How you all doing today?
Good morning, Jock. Doing well.
So we know we sort of left off our little intro conversation talking about the future. But before we do, we want to hear a little bit about your origins, like how you started. We know you're from Texas. We can hear the twang. So we want to hear, like, what was it? Was there something in your origins that got you involved in wealth management and financial planning and thinking about some of the things that we'll be talking about? What's the story there?
So I guess my story may be unique, maybe not. But when I was in elementary school, actually, we had a program where we had virtual investments. And we bought in that program, different stocks. I bought Target because that was a store that was down the street from our house. I knew I went there sometimes and, we bought things and it was just familiar to me. But during the course of that semester in that program, I saw the value of the Target stock increase. I was like, wait a second, this is all virtual money. You're telling me if I could just press buy one day and press sell the next, some days later that I'll have more money. And I didn't have to do anything in between. They're like, yeah, that's how investing works. That's how stock ownership works. And that was the seed that was planted in my mind. It's not like I went home and started buying stocks immediately. Now, I was still very much a kid. I worked with my dad and, I did save up money, but I hadn't really gotten into investing until I had the opportunity to go to New York. And that was the real reason I went to New York, not only to be on a football scholarship at Fordham University, but to be closer to Wall Street. I was like, hey, you know what? This is where it's happening. This is where stocks are traded. This is where, finance is done. I'm in New York City. So I was able to use the Texas football craziness, right? Because it is crazy down there, the whole football world. But was able to use that skill set to get an opportunity to move to New York, to then pursue a degree in finance and to intern at different Wall Street banks, and to ultimately start my career in the industry.
So just connecting one more dot, when you think of equity, so we sort of briefly discussed what we think of equity in terms of diversity and inclusion space and in terms of the real estate space. But in terms of financial services, when you think of equity, how would you sort of describe or define that?
Yeah. So equity to me is ownership. It's
Mm,
ownership, right? It's free and clear ownership. And one of the things I really like most about finance and about investing, especially in stocks, is that the stocks don't know who you are, So there's zero chance that they can block your purchase because of your background or because of your credit score or something like that, because had a bad relationship with someone. There's opportunity to own, and it's an equal opportunity that's afforded to everyone.
And is that only in stocks or do you see opportunities in other things?
So, my primary background is in stocks. And when you think about stocks, I guess there's a few different ways to think about it. You have the public equities, and those are, those that are traded on the stock market, right? So, we think about equity ownership in the companies like, Target or Walmart or, all these different publicly traded companies, Amazon, Google, Meta. But there's also, to Melanie's point, there's real estate equity. There's equity, to your point, in the HR space, DEI equity there. So we want to have ownership of our own kind of human rights and our values as people. But, kind of going back to the financial aspects, there's also private equity. There's private equity in businesses. There's private equity in larger companies and smaller companies. And that might be something we can talk about a little bit more is, what venture capital looks like, what private equity ownership looks like, and then what that means to be a publicly traded company and have public equity available.
Those are good distinctions. I hadn't thought about private equity, mostly because we're talking about collective equity today. So how would you, so maybe there's a little bit of a jump because I don't know enough about collective equity in terms of some of the things that you might know. So going from, individualized equity, being invested in a company or invested in stocks to collective equity, what's sort of the transition there? Is there a jump? Is there sort of like there must be a building of something to get to collective equity?
And I guess I want to maybe understand your question. So when you say the jump between individual stocks to collective equity, I guess that's a good question as well. Is how is collective equity being defined?
yeah.
Is that more so, within the community, or is that, even on a more global type of sense?
Well, I think go ahead, Melody. You're going to say something.
I'm happy to go with what you were going to say, Derek, but I'm curious for you, what is the power of collective equity, Jock? Like you do think about equity building, ownership building on a community level. So tell us what that is for you and why that's important.
Absolutely. Absolutely. And I guess I'll kind of start with a story from, when I was working, in that kind of institutional space
Yeah.
and how those lessons how they can translate to the community level. So in the institutional space, as equity owners, you typically have, management's ear, all right, because you own a piece of their business. They are beholden to the shareholders, right? To those that own the business, they technically work for those folks, right? And their goal is to try to give as much value to those people, to those shareholders as possible. I know that can kind of get a little bit contentious because people are like, hey, don't maximize profit just for these shareholders. But on the flip side of it is, shareholders, once again, they have management's ear. So, I was in several different instances where, large equity owners were really pushing for certain initiatives and certain things to happen at companies. Even talking about diversity on boards, I was able to to really push a company that we own to increase the diversity that they had on their board. And that's because we were a top 10 equity owner. Uh, and, they not necessarily had to listen to us, but they respected our opinion and how we felt like they could continue to add value, to their business. If we kind of bring that to the community, the same theories still apply. What are the things that community can really benefit from? So, if it's wages, if it's, opportunities for job development, if it's, procuring from local suppliers, if it's, fair pricing or benefits that are being provided to workers. There are a number of different things that, we as community holders or community members that could also be, owners and collective equity owners of small businesses that we can voice as a part of, the rights that we have as owners. And I think that that's something that, isn't discussed a lot is that, equity ownership does come with rights. And those rights can be expressed through voicing opinions to the management team.
How would a community get started on that? So if I think of, any random, I won't say random, but any small community or small group of businesses on a street or in a square, what would the community collectively start the business, or would the business owner say, I'm looking for new investors? Like, have you seen models in which that's gotten started?
Yeah.
Yeah, absolutely. Absolutely. So my time with the Ujima Fund here in Boston, I think is the best example of what I've seen of community voicing their kind of standards. And that's exactly what they were called. They were called the community standards. And you had to join the Ujima Good Business Alliance you had to adhere to those standards in order to be able to join the Ujima Good Business Alliance. And once you were a member of the Good Business Alliance, you could receive financing. And that financing also came from the community. So there were a number of, benefits, many of those that I just mentioned around wages, around, voting rights, if there is employee ownership, sharing information around healthcare and benefits, making sure that you're not trying to block unions or anything like that from getting started. That would once again enable and provide rights and power to employees, making sure that you're hiring from the community, that you have a diverse set of staff and diverse management. That was a situation where the standards were set by the community, and all of the businesses that bought in, were able to receive the financing. So I think that that's one example. That's a very, I think, unique example. You don't see that, all the time, but you do see a lot of investors, I guess, have some sort of criteria that they want when they invest in a business. And investors, once again, do have that say to say, unless you're going to do these things, whether it be raise wages or hire more diversity or, treat people more fairly when it comes to bonus time or whatever the case may be, then we won't invest in you. And then that goes back to, well, if businesses want to get started, if they want to get off the ground, then, they do need to listen to the voices of investors. So now community investment funds still getting started, still trying to figure out how to get more people involved in those community investment funds. They can be tricky because of all the different laws that are out there around the types of investors that can make private investments. And we can talk a little bit more about that. But, those standards, those models, they are starting to be created in a number of different instances.
I feel like there's like a little bit of a tension though in terms of community investing, because there's the possibility that a community may want to be invested but not have the funding. They won't have the capital, but they may have the intellectual capital. They may have the knowledge or sort of the skills. But you may have someone who has a lot of financial ability who might say, well, I'm financing this.
Yeah.
I want it to go this way, but you may have 10 people say, well, we have the skills and the knowledge. We think it should go the other way. Do you know how that might get resolved, or does it get resolved?
Yeah, that's a great question, Derek. I mean, there's a lot of, the money's in one hand and the intellectual and community power is in the other. You are starting to see, Some affluent investors start to think more critically about mission-driven investments and social impact investments. And, you have foundations out there that have, these sections of their organization that really focus on this space. But you're right, right? A lot of the times the people with the money are furthest from the problems, right? They aren't the ones that are, kind of on the streets, grassroots, understanding what's happening on a day-to-day basis. So it's really difficult for them to come in and understand what the community needs unless they take that step back and listen to the community first. So it really does come down to, I think, just values alignment and making sure that, hey, if we are going to have, some big time money come in, then let's make sure that we're all on the same page first. Because I've seen instances, like you said, where organizations will start off with a certain mission. Then somebody like, hey, I like what you're doing, but I need you to change X, Y, and Z if you want this check. And unfortunately, sometimes they have to change what they're doing in order to, get the funding that they need. So I agree with you. I think, we're still kind of in that work in progress, trying to figure out who those allies are. Once again, same way in DEI, we have allies internally in corporations. We need to find allies in this financial services space that are going to be willing to come in and provide more patient capital, but the capital that's going to be aligned, with community needs in a way that's going to create value for everyone.
Okay, so equity equals ownership.
Yeah.
And there are different forms of ownership then. So there's the financial capital kind of ownership. And you're also talking about community and intellectual knowledge kind of
Absolutely.
ownership. Is there a way that folks who are closer to the streets can build their own financial capital, even in small ways, that they grow in alignment with their intellectual and political knowledge base and capital? Are we necessarily dependent on allies, big capital investors who might come from more like an outside space? Or, like what are the alternatives? Are there ways that folks who are closer to the street who have some resources can pull together with other folks from the street who have some resources, who can grow their own capital, such that you're not as dependent on the allies from farther away?
Especially in a virtual and digital world where you have different opportunities.
Yeah. No, great point. And, sorry if I made it seem like you have to have somebody, a rich uncle for you to get rich. Like that's not the case. You can definitely get started on your own. That was more so in the context of if we're trying to grow our own businesses that have these level of values, because, to Derek's point, it's really hard to sometimes finance our own businesses if we're not, financing them with a significant amount of capital. So that was more so on the capital gap on the business front. But on the wealth gap for individuals in the community, then there are a lot of different ways for someone to get started with their wealth building journey, with their equity ownership journey. And, it might sound, cliche or basic or fundamental, but it's really around starting to own stocks. It's starting to at least save, because once you get to that savings and you're paying off the debt, then you're starting to build equity, because equity in personal balance sheet is net worth, right? So what are your assets minus your liabilities? And if you can start to, pay down some of those liabilities, especially those high interest credit cards or those large loans that are just killing you in the interest expense category, then you can start to build equity on your own balance sheet, and that's going to show up in your savings account at your bank. So that's where you can start. But then, the question where, a lot of people start to ask me, and they're like, well, hey, great, we've started to pay down debt. I'm starting to build up some savings. Now what, right? How do I invest this money? Where do I go to start to build passive income? Obviously, a lot of people think about real estate and using real estate as a tool to start to create wealth. And I would say that even before then, people have access to, at times, a workplace retirement program, like a 401k or a 403b. And in those, you can buy equity, you can buy funds and ETFs, and that's going to be a opportunity for you to begin investing. But even if you wanted to set up your own account, a brokerage account, and start to buy ETFs, and that stands for exchange traded funds. So essentially, it'll be a portfolio or basket of about 100 to 200 different stocks all in one. And you can buy some of these for very little. And I'm talking about $50, $100. And you can start your journey on that path. And in that way, you're not necessarily looking for an ally. You don't need an ally. You have your own account, and you can make contributions to that account and continue to buy ownership in those funds within that account. Now, once again, you may not have all the say so of running the businesses and having them do certain things, but you still can get a vote. It's called a proxy vote, and every shareholder that at least owns individual stock in the business can vote at the annual meeting on whatever the voting issues are of that year. So that's one way that we can practice maybe some individual power outside of needing allies.
Can I just take it back for a second? I want to take it way back. So to all the 20 somethings who I don't know if they're watching, but if they're watching, or if you were to think back to your teenage years, when you had your virtual stocks, it's very common for financial planners and wealth managers to say, once you get out of the debt, you pay these things down. How do you get people, especially these young people, to not even think about going into the debt in the first place, especially the credit card? Like, what do you suggest or say or caution them against by saying, to tell them, don't even go down this path so that you don't have to deal with it later?
Great.
A debt-free world. I wish. That would be a beautiful world, because I know, a young jock and a current jock is not debt-free. that mortgage is calling my name every month. But I think it kind of goes back to understanding what your current situation is. Living within your means. Trying to understand how you can, just really be conscious about the amount of money that you're spending. They say the spending power in Black America is like $1.6 trillion or something like that, which makes it one of the top 15 largest countries in the world. All right. And that alone says, wow, we're spending a lot. And a lot of it isn't coming directly from the bank account, is going onto the credit cards and onto the, Banana Republic or the Macy's or whatever card that we might have. I don't know how many Black folks are at Banana Republic, but I know a few.
One.
I can't, my shoulders get too wide. It starts getting tight on me.
For us, but yes. Yeah.
It starts getting a little tight. But no love for the broad shoulder, man. But it's cool. But we use these credit cards. We have money that we're spending, but we're not spending within our own buying power. So I think that's one, just understanding what our true buying power is, scaling that back a bit. It's not easy, it's not fun all the time, not to take that trip, not to, catch that next flight, not to, have that spur of the moment, a night out and go, just kind of ball out at the club or wherever you may be going. But it just takes a little bit more, I think, a more measured approach. And that can at least avoid the credit card debt. Now, other types of debt, as you all know, whether it be student loans or mortgages, they're much lower interest rates. And most of the time, when I'm working with folks, like, hey, if you have student loans and those are 5-6%, keep those as long as you can. There's no need to try to be debt free from student loans, in my opinion, because you can always go out there and try to invest. And on average, the market is going to yield you a higher return than those interest rates would on those student loans or on that mortgage. So, yeah, it's the psychology of it all. It's our relationship with money,
Yes.
what our story is with money that can hopefully help us stay away, from those credit cards.
And so much of what we do on this podcast is think about shifting our perspective. So, we took notes. We just had such a juicy earlier conversation with you when we were thinking about what could we do in an episode, a conversation with you. And I'm looking at some of the words that I highlighted from our initial conversation. And there are words like recapture and protect wealth. And that stuff just like gets me charged. I'm like, that's power. It's about shifting our perspective about the economic power that we actually have. It's like, right, we have money we spend. We're very good at spending money. And what if we understood that there are other things we could spend our money on that can give us a return? And so I think we're just trying to get help in thinking about like, where would you put your money if you're not going to like spend it on the club and like in your community, something around you where you can see an impact. Where can you invest in that you're seeing, oh, there's some kind of benefit. There's some kind of payout that I can see.
Jock, before you respond, I also want to jump in and say, because we talked about wealth and what wealth is in the reparations conversation, where Chris Manjapa was saying wealth is not just money. It is also ownership. It's also your health. It's your education. It's your ability to express your culture without constraint. Wealth is a lot of things. Now, in the situation with this conversation, people will say, well, I may not have a lot of wealth. So then I think there's also that issue of like, at what point can someone say, I have this much money, and so I am wealthy enough in order to take action, to do something? Like, what is wealth on a community scale if we're talking about a community that is defined by others as not being wealthy? So I think we have to also just reimagine what the definition of wealth is in order for people to feel like they can take action.
Wow. I like this a lot. Appreciate you all for, expanding the conversation, right? Because it's so expansive, right? Because we're not defined by our money. When Melanie asks about, how can we think about ways to start our journey and create income, and, Derek, to that same point, how do we think more expansively about, what wealth means on the individual level and on the community level? Now, there's obviously, I think, one big way to expand the conversation around, our value of wealth. In the exam that I took, the CFA exam, they had what they call a financial balance sheet and an economic balance sheet. The difference between the two is that the economic balance sheet included a different type of capital, not just financial capital, but also human capital. All right. So we as people, all right, how do we invest in ourselves? How do we invest in our skill sets? How do we invest in our time and, where we're spending our relationships, the things that we're learning, the skill sets that we're developing? And, there's a direct correlation to, well, the more human capital you build up, obviously, it can create a greater financial output. It can create greater financial capital. Everyone always says, it's not your network, it's not your net worth, it's your network, or your net worth is your network. And that's true. And that once again just goes back to the fact that, we as people offer so much to each other. But once again, what are we bringing to the table? What are we offering each other? Is it something unique? Is it something that everybody else offers? Is it something that we know very well? Is it something that, we're just kind of picking up, and watching YouTube videos or, just trying to learn about? I think that's an area where we can really kind of build a ton of, latent power of saying like, you know what, for the next, 3 years of our lives or 2 years or just 1 year of our life, we're going to start to learn whatever we're passionate about as deeply as we can, so that as we present ourselves and our skill sets and our gifts and our talents and our treasures to the world, they'll see value in us as an entity, as an individual. And obviously, if we do that collectively, then there's just so much power there. And I think that's where the true power of the equity is, because no one can stop you from learning and investing in yourself. So as we think a little bit more expansively about what financial capital means and how to start building wealth, I think it really kind of starts with us and us understanding that, well, hey, well, yeah, maybe we can sit here and learn the tools to build wealth financially, through investing and through home ownership and, through engaging in small business investing or large business investing. But, for us to even get to that point, we have to make that investment in ourselves and understand that, hey, we're either going to put the time in to understand these concepts, or we're going to hire somebody like Jock. Just but no, in all seriousness, there's so much that we can do for ourselves that can help us in the long run.
What do people come to you for, Jock?
When I started, I thought people were just going to come to me for investing. I was like, oh man, I'm just going to be the investment guru for everyone. That is not the majority of my work. There's so much other stuff that they come to me for. It might be estate planning. It might be tax planning. I'm not an accountant, but there are a number of different tools and strategies that people use to start to mitigate their taxable income or lower their taxable income, and therefore keep more, cash in their bank account. People talk about, charitable giving, and that kind of ties into the tax planning conversation. Obviously, people talk about retirement. I do work with retirees as well that are thinking about having livable income for the rest of their life, despite not working. They may have a pension, they may be receiving Social Security, but what other income is necessary for them to live and live, as they want to. And then, there's the foundational aspects as well around the cash flow management, thinking about the proper amount of insurance coverage, and protecting those assets, right? That they may be building, but, maybe they have a young family, or maybe they have a mortgage that isn't paid off yet, and they don't want to leave their family in a bad position. So they want to protect those assets so that the next generation can have them, through an insurance policy. But then, yeah, the bread and butter is still, I believe, and where we try to get to the conversation to is, all right, well, let's start thinking about this investment portfolio. And there's so many different ways to think about the investment portfolio, but it really starts with understanding their mental ability to take risk, and understanding that investments move up and down. So do you, want one that's, kind of swinging for the fences and you might make a lot? Or do you really want that steady Eddie approach where you're pretty much guaranteed to not lose money by taking very little risk? All right. And I know you're not supposed to say guaranteed, but there are these things called risk-free investments, money market accounts, right? That is backed by the federal, the federal government. And some of those pay over 5% right now.
Yeah.
So yeah, there's a range of folks, but a range of topics, but, the core of it, outside of leaving a legacy or protecting your legacy, is creating a legacy. And I think a lot of that is done through investing.
So we know we're running close to time, but you told us in an earlier conversation about the Dream Exchange. And could you tell us a little bit about that? And is that something that folks who are watching could get involved in?
Yeah. So I'll say absolutely, folks can get involved. But to give a quick background, the Dream Exchange is a company. I invested in it, so let me just say that. So it doesn't look like I'm trying to hype it up more than it is because I'm an investor. But I invested in this business. It's still it's not publicly traded at the moment. It's a private business. But their thought is that they're going to create a new exchange that's going to give access to smaller businesses to go public. So this is going to be the first Black-owned stock exchange in U.S. history. And when you think about what an exchange does, it's essentially the intermediary between buyers and sellers. So exchanges are the ones that are making sure that your shares are held somewhere when you're buying them, and that when you're selling them, that they go to that seller or to that buyer safely. Um, and the real kind of thing that made me interested in it is not just the exchange being open to smaller businesses, and they're trying to now open up through legislation. It's called the Main Street Growth Act, that's in Congress, has been introduced on the House floor. They're trying to open up this new type of exchange called the venture exchange. And once again, that's where more businesses can go public and have access to capital. So we all know that one of the biggest impediments to growth is, especially for Black businesses, is access to capital. And the results are staggering that about 92% of jobs within companies are actually created after a company goes public.
Oh, wow.
So the fact that we're not able to go public as Black-owned businesses is really limiting the amount of jobs that are being created in the Black community. So I feel like, especially when we think about public equity or collective equity, that once we have a stock exchange that can allow these small businesses and everyone to invest in them, then you just remove so many of the barriers that are already here right now that, once again, you might not be able to invest because you don't have a large enough wealth size, you're not an accredited investor, or you may not meet the minimums required for investment. That this is going to remove a lot of those hurdles. And even for those that have participated in crowdfunding, it's really hard to get your money back. There's a lot of fun and a lot of activity or excitement that goes into the initial stages of crowdfunding. It's like, oh yeah, we raised, $300,000 or $500,000 or maybe $1 million plus. But then it's like, well, does the money go back to investors? When does it go back to the people that put their money together? And that's really hard to do if you don't have an exchange where you're able to actively buy and sell securities, because, you may invest in a crowdfunding round, but, you might need that cash for anything that happened in life. And it's really difficult to sell as of right now. So the Dream Exchange, I think, is going to be a new platform that's going to open all those opportunities up. Oh, and I'm sorry, if people want to participate in that, you can go to dreamx.com, and I believe they have a way for people to one, register for their upcoming webinars. And on their webinars, they give some instructions on how you can reach out to your local congressperson to make sure that the Main Street Growth Act is passed in Congress.
Good to know. Good information. Well, Jock, we appreciate your time and your information and your ideas. We thank you so much for joining us today.
Absolutely. Absolutely, Derek. Thank you so much. And Melanie, thank you as well. Pleasure speaking with you both.
Thank you. And for those of you who are watching, if you have questions, you have comments, please feel free to leave your questions or comments in the field on whatever platform you're watching. And we will look forward to seeing you next time on the Black Lining Forum. Take care, everyone.